Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. I'd like to offer you some foreign exchange charts today. And the first one I'm going to look at is the euro against the dollar. Here we have a second bearish black crow and follow on low after the previous session's unsurprising spiking bearish harami. The market dipped below but ended up closing right on the old influential June 2018 high at 118.51. Today we've opened and immediately headed lower, dipping below the broken yet still influential 2011 to date downtrend, currently at 117.98, and so far halting at the lower channel line, currently at 117.85, of the recently formed end of July to date fat bull channel. I'll call it a fat bull channel. Interestingly, if we go further down, then we'll be challenging the optimized May to date uptrend, currently at 117.65, and the true uptrend, which is currently at 117.14, plus we'll be on for a weekly key reversal right on the top of the market. Hence, I think this is why the market's taking a good long look now and thinking whether it really wants to do that. The next chart to look at is cable, aka sterling against the US dollar. A follow-on lower yesterday, if tentatively, to the previous session's bear spike. Today we're testing lower once again, edging below yesterday's range, but once again, tentatively. We are currently within a fairly free area, free from many support and resistance levels. We do not run into anything of note below until the key 50% Fibonacci line for the whole of the 2016 move at 132.33. Overall, the market continues to move nicely in between the lower time below, currently at 131.70, and the middle time above, currently 135.76, of the bullish May to June Andrews pitchfork that has run this ride since June. The next chart to look at is euro against sterling. A second bearish black crow yesterday as the market tried to penetrate the congestion below formed of the lower time, currently at 88.70, of the mildly bearish late June to late July shift pitchfork, the 50% Fibonacci line for the whole of 2020 at 88.89, and the neckline, currently 88.84, of the frustrated big cathedral head and shoulders top, yes, that one from March and April this year. It managed to breach it and close below all but the lower time, which it touched but then shied away from. Today, it is trying once again and looking like it might have some luck with it. This is all interesting as below these three, we do not have any major support until the long moving average, currently at 87.82. The next chart to look at is the US dollar against the Indian Rupee. A bullish white soldier yesterday after the previous session's bull hammer action. The market has shied away from testing down to the next big significant support, the big 50% Fibonacci line of the July 2019 to April 2020 move at 72.64. And we're again higher today, though not excessively given last week's daily ranges. We're in fairly free territory for now. The only thing close is the former mini bear flag target X at 73.40. Overhead, we have the Fibonacci congestion within which lurks the 50% Fibonacci line for the September 2019 to April 2020 move at 73.68. The last chart to look at is the US dollar against the Brazilian real. This chart, which is one of my most complex, had thinned out but is becoming complex once again. The last four sessions have been some of the most complex. What we ended up with the day before yesterday was a counter to the counter, combined bearish dark cloud cover, bearish double, and the possible final part of a bearish thick sandwich. The key was once again around the close. How good is a supportive combination of significant 50% Fibonacci line of the May to June move at 539.29 and the gently rising medium moving average, currently 539.19? Well, at first glance, yesterday's action, not that much. Yesterday, the market punched down through all of these, plus the short stroke medium moving average, currently at 536.48, which was just below, and finished with a closing black Mariposa and possibly inverted hammer action. This was just ahead of the lower time, currently 533.75, of one of the two bullish pitchforks that have run this market, the early June to mid-July bullish shift pitchfork. Just below that, and we have the lower time, currently 527.28, of the even bigger bullish shift pitchfork for the January to June move. Both of these lower times may now be in place, so caution. And with that, I wish you good trading and stay safe in the markets and in real life.